Hi everyone. Welcome back to AI Finance Buddy. Today, we're diving into a market that's sending mixed signals. The tech sector is shining bright, with Alibaba, BABA, soaring over 11% after a stellar earnings report. Meanwhile, the retail space is feeling the pinch, especially after Walmart's WMT cautious guidance. What's driving these shifts, and how should you respond? In this episode, we'll break down today's biggest market trends and top stock movers. We will explore the impact of inflation and interest rates on investor sentiment. We'll also share an inspiring success story of Liam Thompson, who turned a modest income into significant wealth through smart investing. Plus, stick around because I'll reveal my personal investment strategy, the real trades I'm making today to navigate these uncertain times. You won't want to miss it. Let's get started. Chapter 1, Today's Market News. Today's market sentiment is mixed, with investors reacting to a blend of strong earnings reports and cautious outlooks. The technology sector is shining bright, particularly with Alibaba's impressive results. Meanwhile, the retail sector is feeling the heat, especially after Walmart's disappointing guidance. Key factors influencing investor sentiment include ongoing inflation concerns and the Federal Reserve's stance on interest rates. This continues to create uncertainty in the market. Now, let's look at the top 3 biggest stock movers. First, Alibaba, the e-commerce giant, soared over 11% today after reporting strong fourth-quarter earnings that exceeded expectations. The company showcased robust growth in its core businesses, particularly in e-commerce and cloud services, driven by a surge in online sales. With a focus on AI-driven growth, Alibaba is well positioned for future success. Buy score, 85 out of 100. Next, Baxter International, BAX, jumped 8% following a solid earnings report that beat analyst forecasts. The medical technology company highlighted strong sales in its pharmaceuticals division, which is like a lifeline in the healthcare sector. Baxter's optimistic outlook for 2025, projecting steady earnings growth, has investors feeling confident. Buy score, 85 out of 100. Finally, Herbalife, HLF, surged an impressive 44% after announcing better-than-expected earnings and a leadership transition. The nutrition company's strong profitability metrics caught investors' attention, despite a slight decline in net sales. With a new CEO set to take charge, Herbalife is aiming for a revitalized growth strategy. Buy score, 65 out of 100. Today's market activity suggests a strong performance in the tech sector, while retail faces challenges. Investors should keep an eye on upcoming earnings reports, particularly from major retailers, to gauge consumer sentiment. As the market navigates through inflation and Fed policies, staying informed will be crucial for making savvy investment decisions. Remember, a diversified portfolio can help mitigate risks in these uncertain times. Chapter 2, Simple Finance Terms Explained. Let's break down some simple finance terms. A mutual fund is like a basket of investments managed by a pro. Instead of picking individual stocks or bonds, you let the manager do the heavy lifting for you. Think of it as a potluck dinner where everyone brings a dish, and you get to enjoy a variety of flavors without cooking. A stop limit order is like setting a safety net for your investments. Once a stock hits a certain price, it triggers a limit order to sell at a specific price or better. Imagine you're at a concert, you decide to leave if the crowd gets too rowdy, but you want to make sure you get a good spot on the way out. The interest rate is the extra cost of borrowing money or the extra money you earn when you lend it. It's like renting a bike. If you borrow it, you pay a fee. If you lend it, you get a little extra for letting someone else use it. Chapter 3, Top Stock Pick of the Day. Today, let's talk about why Alphabet, Google, the parent company of Google, is a great investment choice right now. First off, Google is a powerhouse in technology, especially in online advertising and search engines. They're making good money, with a revenue of $28.61 per share and a net income of $8.19 per share, which shows they're quite profitable. Plus, they have very little debt, which means they're financially stable and can handle tough times easily. Another great sign is their interest coverage ratio of 522.74, meaning they can easily pay off any interest on their debts. Google also invests a lot in research and development, 14% of their revenue, so they're always working on new ideas and innovations to stay ahead in the tech world. However, keep in mind that there are some risks. The tech sector can be volatile, and changes in regulations or economic downturns could impact their performance. Overall, with strong fundamentals and a focus on growth, Google looks like a solid pick for the next year or so. Chapter 4, Core Long-Term Strategy with ETF. Imagine you want to invest in a whole garden of flowers, but you only have a small pot. That's where ETFs, or exchange-traded funds, come in. They're like a pot that holds a variety of stocks, allowing you to invest in many companies at once, which is great for long-term growth. Now, think of the MSCI World Index as a map of that garden. It represents thousands of companies from 23 countries, helping you spread your investment across the globe. This way, if one flower doesn't bloom, others might thrive, giving you a better chance for a beautiful, flourishing investment. Exciting news! DWS has just launched a new investment option called the Strackers MSCI World X USA ETF, now available on the London Stock Exchange. This ETF lets you invest in companies from around the world, but without including those from the United States. It's a fantastic way to diversify your investments globally while focusing on markets outside the US. Plus, there's been some buzz around MSCI Incorporated, the company behind the index. Analysts are feeling optimistic about its future, suggesting it could be a solid investment opportunity. If you're looking to invest in companies that help track global markets, these developments could be worth your attention. Remember, investing has risks. Think long-term and don't use urgent funds. Chapter 5, Quick Financial Lesson. Having mentors and being part of mastermind groups can be game changers in your financial journey. Think of a mentor as a guide who has already walked the path you want to take. They can share their wins and mistakes, helping you avoid pitfalls and make smarter choices. For example, imagine Sarah, a young entrepreneur. She struggled with budgeting until she joined a mastermind group. There, she met experienced business owners who shared their budgeting strategies. By learning from their successes and failures, Sarah quickly improved her financial skills and grew her business. Mastermind groups also provide support and accountability. When you share your goals with others, you're more likely to stay committed. Here's a simple tip: seek out a mentor or join a local mastermind group. Start by asking someone you admire for a coffee chat or look for groups online. Learning from others can save you time, money, and stress on your journey to financial success. Chapter 6, Real Stories of Financial Success. In the heart of Edinburgh, Scotland, Liam Thompson, a dedicated auto technician, embarked on a financial journey in 2015. With a modest income, he decided to invest in index funds, specifically the Vanguard FTSE All-World UCITS ETF. Over the next 5 years, Liam diligently contributed £200 a month, embracing the power of compound interest and market growth. By 2020, his initial investment of £12,000 had blossomed to an impressive £18,000, thanks to the steady rise of global markets. Liam learned that patience and consistency are key. He didn't panic during market dips but stayed the course, allowing his investments to flourish. His story teaches us that anyone, regardless of their background, can build wealth through smart investing. Remember, it's not about how much you start with, but how committed you are to your financial future. Start small, think big, and invest wisely. Chapter 7, Summary and Personal Investment Strategy. Thank you for joining us today. Let's quickly recap what we covered in this video. In today's market news, we explored a mixed market sentiment, with the tech sector thriving, especially Alibaba's strong earnings, while retail faces challenges, highlighted by Walmart's disappointing guidance. Keeping an eye on inflation and the Federal Reserve's policies is crucial for investors. In our Finance Terms Explained section, we simplified key finance terms. A mutual fund is a managed basket of investments, a stop limit order acts as a safety net for your trades, and the interest rate is the cost of borrowing or the reward for lending money. Our top stock pick today is Google, known for its strong profitability and low debt. With a solid interest coverage ratio and a commitment to innovation, Google stands out as a promising investment for the future. We discussed ETFs as a way to diversify your investments, likening them to a pot that holds various stocks. The new Strackers MSCI World X USA ETF offers a global investment opportunity, helping you spread risk across international markets. We emphasize the importance of mentorship and mastermind groups in your financial journey. Learning from others can accelerate your growth and help you avoid common pitfalls, so seek out mentors or groups to enhance your financial skills. For today, I am adding $15 to my MSCI World Index investment and experimenting with $10 in a fractional share of our suggested best buy pick, Google, both with 1-to-1 leverage to demonstrate the importance of cautious and diversified investing. Before we wrap up, let's bust a common financial myth: you should only invest in companies you use or like. The truth is, a company's fundamentals matter more than personal preference. Many successful companies aren't consumer brands but still generate strong returns. Remember, investing should be based on financial data, not emotions. Now, here's a daily finance challenge. Calculate how much you spent on coffee or snacks this week. Could you invest that instead? Take a few minutes today to complete this challenge and share your thoughts in the comments. Small steps lead to big financial success. As we conclude, remember to do your own research, test strategies, and consult a financial advisor before making decisions. If you enjoyed this video, please like, comment, subscribe, and turn on notifications to stay informed and support our channel's growth. Join us for the next episode, where we'll build on your financial knowledge. We'd love to hear your thoughts, questions, or topic suggestions in the comments. Enabling notifications ensures you never miss valuable insights and market updates. Thank you for watching, and happy investing.